So for those of you who are joining us the first time today who are not yet familiar with Escalon, Escalon is able to support your business from startup to exit. We're your one-stop shop for essential business services at every stage. From CFOs, strategic finance, accounting, human resources, insurance. We get your back office services done so you can focus on growing your business. Over 5,000 clients depend on Escalon, and we hope that one day soon we could add your name to this list. Why choose Escalon? Peace of mind. We provide you with one and done solution for all of your needs: CFO services, HR, accounting, taxes, insurance. We protect your profitability, and we are partners in growth. Anybody joining today's webinar gets $500 off your 2023 tax preparation by reaching out to us after this call. You have 30 days to claim that offer. We are very excited to have Jason Atkins joining us today as our moderator. Prior to joining Escalon, he worked at Trinet for 6 years in the technology space. In his spare time, Jason spends with his 3 children exploring new restaurants and anything sports related. We would not be able to be here today without our partners, Bridge Bank, McCormick and O'Brien, and MRGN, and I will pass over the mic to our friend Katie Rice MRGN to share a few words.
Hey everyone, I'm Katie from MRGN. MRGN, very quickly, is your business co-founder. We can help create visuals for cash flow scenarios. If you're thinking about getting debt, equity, financing, if you're considering expanding headcount, things of this nature, MRGN can help you visualize how it affects cash flow. And we love working with our friends over at Escalon to, create these visuals for you. Yeah, thanks. Visit MRGN.ai if you want to learn more, or reach out to me.
Thank you, Katie. We have our friends over at Bridge Bank. Bridge Bank, with its roots in Silicon Valley, serves the landscape of ideas nationwide. This means to help businesses like yours grow from startup to IPO and beyond, not only with sophisticated and flexible financing solutions, but also with their enterprising approach. They believe in risk takers, the game changers, and the disruptors of banking that moves you and your technology business forward. And lastly, our partners over at McCormick and O'Brien, which Charles, our guest today, will share a bit more about. And I pass it over to Jason now to introduce our guest today.
Hello, everyone. Jason Atkins here with Escalon. Thanks for joining. Sorry again about the technical difficulties today, but glad we're here now and excited to introduce Charles McCormick, who is also a VC as well as a lawyer. So don't want to take too much of his thunder. I can let him introduce himself, and then we'll get started with some Q&A. And anyone on the call here today, feel free to go ahead and drop your questions in the Q&A section, and we'd be happy to get those answered as quickly as possible and try to get everyone involved. So with further ado, Charles, please introduce yourself, and then we can take it from there.
So hi, everyone. My name is Charles McCormick. This is Meet the VC. I'm a partner with Beni VC. We've been investing directly since about 2017. We have 33 portfolio companies in a diverse range of industries doing really interesting, innovative, and exciting things. I could talk a lot about any one of them, and I'm really happy to see a couple of our portfolio CEOs are listening in. So I'll be sure to plug them at the right time, but really happy to be here. I started out as an attorney. I am still a corporate partner with McCormick O'Brien, LLP. We work with emerging companies at all stages, venture capital and private equity firms and angel investment groups. I have been practicing for more than 25 years, and my transition to venture capital really came out of my law practice. Worked a lot with venture capital firms and with companies that were backed by venture capital and private equity. And around 2017, I met Cheryl Campagnoli, who's the portfolio manager at Beni VC. And, what grew out of that is what is currently Beni VC. It's been a really interesting ride. I think we've got a really interesting future ahead of us and a lot of exciting opportunities for our portfolio companies. So I think, Jason, that's me. and happy to turn it back over to you. And thank you and Escalon and Bridge and your sponsor team and Katie for putting this all together.
Yeah, it's my pleasure. Thanks for giving us some of the background and information into it and insight into Beni VC. I definitely took a look at the portfolio companies. You guys have some really cool, innovative groups in there, so definitely cool to see. With that said, you actually did a Meet the VC a few years back and had a chance to review it and listen in on it. So, I know you mentioned about Beni VC and how you focus on multiple industries to really diversify your portfolio, and talked about your investment strategy being based on different themes. So things like mental health, sustainability, equality, and innovation. So has that approach changed at all at Beni VC? If yes, how much has it changed and why? And if not too much, why are you sticking to what you had, focused on in a few years back?
Thanks, Jason. Yeah, I wouldn't say it's changed. I'd also say that our themes are not mandates. And so in other words, we're not the crypto fund, we're not the AI fund, we're not the med tech fund. The themes that you mentioned, equality, innovation, mental health, these are all substantive areas, metaverse, that are all, just really, really interesting to Chiro and me. And so we just naturally look for investment opportunities in those areas, but honestly, not to the exclusion of others. And so if you're doing something that doesn't fall into mental health, that doesn't mean that we wouldn't be interested in speaking with you. It's just that when we think about the way we want to describe ourselves to the general public, we get back to the idea that, first of all, Beni VC's mission is to make money, but secondly, it's to invest in impactful companies.
Absolutely. We're all trying to make a difference from, day to day. So focusing on those strengths and supporting your portfolio companies in areas that you see fit is definitely a great strategy. So back, a few years ago, the metaverse was obviously a big hot topic, and, a lot of companies were getting involved, and it was really an unknown space at the time. And so, now that things have taken off and companies are still exploding in the metaverse, obviously innovation continues to evolve. And one of the bigger hot topics these days are AI and crypto. And, crypto's been around for some time, but, with Bitcoin seeing an increase in over 100% year to date, what is your thoughts on the AI space? And, to get more granular, is there any specific verticals under AI that you guys are focusing on these days?
Well, I could talk about one of our portfolio companies, which we've been invested in for 3 years now. And they were a precursor. They came out before ChatGPT, and they're really not a large language model. They use artificial intelligence to evaluate radiology reports in the area of dermatology. And we're very happy with that company. We think that's a great use case. And with any new technology, whether it be blockchain or artificial intelligence, the trick, I think, is to find a use case, or the metaverse, because these are all really exciting things on their own. But the question is very much like the question was with the internet. This is awesome, but how do you make money? And so what we look for are specific use cases for emerging technologies, whether that be the metaverse, artificial intelligence, blockchain, and cryptocurrency you can think of as a use case for the blockchain. And there are many, many others, and I'm not even sure that Bitcoin is the best, but you have to start somewhere. And I think that's what we're finding in all these emerging technologies. The metaverse is an example as well, right? That, we're still extremely bullish about the metaverse. We basically agree that it's going to be the new internet. It's going to be the next internet. Don't ask me when. Don't ask me what the killer app will be. But we look for things like that. So, I've been doing this since the internet was as new of a word as the metaverse. It's a very similar progression, at least so far, right? Where this is super exciting, it's super cool. What's the killer app? And, when I think about it, for the internet, the killer app was electronic mail. And so what we're looking for is, what's the electronic mail of the metaverse? What's the electronic mail of artificial intelligence? What's the electronic mail of blockchain?
Yeah, there's always the outliers that, come about. So, focusing on that is definitely a good move. Yeah, so, when it comes to different founders, and, we talked a little bit about, what type of businesses and, industries you focus on. But when it comes to founders, what do you really look for in partnering with a founder or backing a founder to invest in?
Well, I think that's probably the principal consideration in making an investment in early stage venture company. A lot of these companies, not all of them, but plenty of them are pre-revenue. Those that are revenue generating are probably not cash flow or EBITDA positive, may not be generating net income. And the saying in the space is that you bet the jockey, not the horse. And what that means is that if I were to get 10 business plans for the metaverse, crypto, artificial intelligence, you name it, they're all proposing something that's massive, game-changing, innovative, incredible. There's no question on the vision of the founders that we hear from. But I think what really drives the investment decision is our assessment of the potential of the current team to execute. And so, in many ways, execution is at least as an important consideration as the vision. And there's an interplay there, because you have to be aiming for an area that is large. And the reason is because you need a good margin of error. So in other words, we're not necessarily looking for, the next best coffee brand. We're looking for a market that might not even exist completely today, or might be very inchoate today, but is going to be huge if things continue along a certain pathway. And we're looking for people that not only have that vision, but also have the background, the skill set in order to execute on a plan. Because I think that makes all the difference between a successful and a non-successful investment. One of the things that we look for initially, because you can't predict the future, is, well, how do they go about assembling their team? And, if we find a founder team that has complementary skill sets and gets along well together, and that's huge. I mean, I've been in meetings where, like the alpha dog emerges, and members of a founder team start correcting each other in the middle of a meeting, and that's fine, but it's not the best presentation. Ideally, you've got founders on the same team that are finishing each other's sentences rather than correcting them. So we look for group dynamics, the interpersonal dynamics. We look for the vision. We look for the background and the skill set, and we also look for not just the vision but the passion. And so a lot of the time I'll ask the question, well, why are you doing this? What is the interest in it for you? And if the interest in it is just to make money because someone published a report that said that in 30 years, the internet's going to be huge, that's not that compelling to us. But if you can tie what you're doing to a life experience or something that you believe deeply in, even if it's not a life experience, because who could have a life experience in the metaverse, right? That's also compelling to us.
I mean, yeah, when passion and drive comes out, you see it in others, and those are founders, that definitely have the what it takes to win and get through all of the noise that's out there. So I definitely agree with you there. So I know that Beni VC invests in early stage seed to Series B. What are some key differences that you see when evaluating or deciding to invest in those different stages for different companies?
Well, I think each investment's a little bit different, and there are a number of factors, and none of them is dispositive. And we don't, for example, assign weights to things. It's maybe more of an art than a science. The biggest difference between a Series A or a Series B investment and an earlier stage investment is that by that time you often have some degree of metrics. And what I mean by that is you're probably revenue generating. And if you are, then it probably costs you a certain amount of money to generate that revenue. It's not the least bit uncommon. In fact, it's by far the norm that at first you're spending more money than you're generating. And, if you think about it, that's why the venture capital field exists. If you were profitable from day one, I don't know why you would need or want venture capital. I mean, maybe to grow at a quicker pace. But if you're able to create a business that is cash flow positive from day one, then your need for venture capital and the role of venture capital is less clear to me. So the expectation is that you probably have a burn rate. You're probably raising money to get you to the next inflection point in your plan. And so we look at the overall plan that a founder will have. So if you are burning $250,000 a month, then you probably need, and you're raising $5 million, that's going to get you about a year and a half. Usually less, but something like that. And so the question is, what are you driving toward? If you're given this money and you acknowledge, hey, well, even when we hit these milestones, we're not going to be cash flow positive. We're going to go out and need to raise our Series B round and our Series C round. And that's completely typical. And investors, I think most investors get that. So investors who say to you, well, I'm going to give you this money and you need to be profitable by the time you run out of runway. I guess it depends on the type of business that you're running, but that's not all that realistic. And so the way we assess it is, does this given tranche of capital enable you to get your business to where it needs to get to your next inflection point so that you can raise that larger round?
Yeah, that makes absolute sense. Okay. So to shift gears a bit, I know that you took over the New York Startup Academy back in 2017. And I know it had only around 43 members to start. And within a few short years, by 2021, you grew to over 2,500 members and still going strong. There's a number of founders on here. So, how are things going with the group? And, why would you recommend founders to join this group and really engage and take advantage of the different networking opportunities and things like that?
So NYC Startup Academy has a mission of providing education, actionable intelligence, and networking opportunities for entrepreneurs and aspiring entrepreneurs. And the first category is self-explanatory. These are people who are building companies at various stages. Some of them have raised money. Some of them have raised a lot of money. Others haven't raised any money and are trying to figure out how to do that. Aspiring entrepreneurs is an interesting group of folks, particularly in the New York City area. And the stereotype is you went to business school, you took a job at fill in the blank, Google, Facebook, Goldman Sachs, JP Morgan, Merck, Johnson & Johnson, some really large Omnicom, some really large company that just happens to be based in New York City. But that's not where your passion lies. You took that job because you knew your mom would be happy if you did, but you really want to be an entrepreneur. But you're, frankly, probably pretty well paid doing whatever it is you're doing, and you're not entirely sure how it is you go about making that jump. And I know some business schools have courses in this, but I think there's still kind of that trepidation, like, am I really going to give my notice into Facebook and launch a startup? That's a big decision. And so what we try to do is give entrepreneurs and aspiring entrepreneurs actionable intelligence. And that is, topics might be, well, what do I need to know about artificial intelligence? What do I need to know about intellectual property protection? I am really good with finance, but I've got a great idea for a fintech app, but I don't code. So, what do I do there? How do you build an app, or how do you build a technology-based business if you're not a coder? If you are a coder, well, maybe you don't have a background in marketing and business and finance. And so how do I take these things that I like doing and make any money out of it? And so ideally, the programming at NYC Startup Academy is geared to address those topics. And it's also geared to attract people who might be able to network with one another. If, for example, they're building out their team and they need to find a core competency, Maybe they're looking for a co-founder. Maybe they're looking for a CTO, a CFO, or something like that. So we're hopeful that through an environment that both gives people the tools that they need to take that step and gives them networking opportunities with other people who are either in the same spot or maybe were there 6 months or a year ago or 2 years ago, and there are mentorships and reverse mentorship opportunities, that we can continue to grow the New York City emerging company innovation ecosystem.
Yeah, I mean, it's a great group. Are you guys still doing in-person events again, or?
So, we were doing live events right up until the governor told us to stop.
Yeah.
And I told everyone to stop. And I think the truth of the matter is I've been a little bit lazy, but we are very much in the process of gearing up to go back to our monthly live events in the very near future.
Okay, well, that's good. More to come from that. Exciting to hear. Good stuff. So yeah, obviously, being that there are a number of founders on the call today and many that will tune in, I'm sure. If you were to, when it comes to formulating a pitch deck and present a pitch deck, what would you give? What kind of recommendations or advice would you give founders to really stand out when presenting and also when they're creating their pitch decks? Just touch on that for a bit.
Yeah, sure. So I think, going back to our theme that you bet the jockey, not the horse.
Mm-hmm.
Tell us about yourself. Tell us about who you are. And you can think of the fundraising process very much like a job interview.
Yeah.
Because if you're an early stage company, or if you haven't even launched your company, it's not like you're going to hire a big four, a VC is not going to hire a big four accounting firm to review your financial statements or even your projections. It's a waste of time. So tell us about yourself. Tell us why you're doing this. Tell us what business problem you're solving. Tell us how you plan to solve it. And then tell us how you're going to make money from doing that. And what I mean is, what's your pricing schedule, right? Is this a subscription model? Is this, are you going to have repeat customers? Are you going to charge $1 million? Are you going to charge $10? Issues like pricing are really not that easy to figure out. So if someone can articulate to us those 5 things, who are you? Why are you doing this? What problem are you solving? What is your plan for solving it? And how are you going to make money? I think that's a compelling pitch.
Very good. Yeah. So good advice there for all the founders out there. So to just touch on an interesting question I came across. Have you ever invested in a company where you haven't met the founders face to face in this, virtual world?
That's a really interesting question. So I don't know if my friend Cooper's on the phone, but I will say this: up until January of 2020, we had kind of an unwritten rule that before we made an investment in a company, we wanted to meet the founder / CEO of the company. And I mentioned this particular person because her business is based out on the West Coast. And we're based on the East Coast. Chero's in Miami, I'm in New York City. And, our typical process is, probably, at the end of the day, probably 3 to 4 months to get to an investment decision from an introduction. Could be longer, could be shorter, not a lot. Mm-hmm. And so we go through this process. We found a company that we really liked. And they were raising money, all the stars were aligning. And we got to the point where we were able to tell the founder, like, look, yeah, count us in, we're in. And then we said, but we've got this unwritten rule. We'd really like to meet all of our founders, CEOs in person. And, her reaction was, oh yeah, sure, no problem. And I think that was not that odd. But since COVID has really changed that. And since then, we have made more than half of our investments without meeting the founder CEO in person. And at first, that was just driven by the reality that, at least in New York, that would probably be illegal. But as COVID sort of evolved, and that the lockdowns were lifted, and it wasn't completely forbidden to interact personally. What we found is that we're still able to get the information that we need without meeting someone in person. Now that could change again. And that said, frankly, I really do like it when we can meet a founder or a CEO in person. I actually like it when both Chiro and I can meet that person. That's not always possible, and it's not always easy. But I think that, this is the way we look at any investment, is that it's a relationship. And the reality is it's probably a multi-year relationship. This isn't like a one-shot deal. And there'll be opportunities where, a founding team will come back or a CEO come back and say, we're doing our next round. What are you guys thinking about that? And, one thing that I'm very proud of with Beni VC is that we continue to support portfolio companies beyond our initial investment. And I think founders appreciate it. I think subsequent investors look at that as a metric, and say, well, if we're going to lead this next round, how many of your existing investors want to participate? And if none do, that may not be dispositive, but I think it's a good sign if you can show support among your existing investor base. And we're conscious about that, and we want to be that type of investor.
Yeah, that's great to hear. There's something to say when you are building a relationship and just meeting a person in person, shaking their hand. It definitely goes a long way to start that and build that relationship over time.
You can learn a lot when you meet people in person. And
Yeah.
I would actually say, even if you're a founder or a CEO and your investors don't have this requirement, you might actually want to think about having that sort of requirement for the investors that you take on. Because that, the relationship aspect works both ways. And, my firm represents a number of emerging companies. And, I would say that more than once, a CEO has said to me, wow, this investor, what a nightmare, causing all sorts of problems. So I think there's a 360 review aspect of investors and founders getting to know each other a little bit before moving forward with an investment. And I think what's good advice for the VC side of it is also good advice for the company side of it.
Yeah, absolutely. With that topic in mind, it sounds like you obviously are, and your team is pretty hands-on when it comes to working with your portfolio companies. Number of different backgrounds, I'm sure, within your organization and group. How hands-on are you, or how hands-off can you be? Like, do you have does it vary by the different portfolio companies? What is your strategy there?
It varies completely by the portfolio company and the need and the skill set of the team. There are some areas in our portfolio where Chiro and I just don't have the expertise. And so we're small investors in Commonwealth Fusion Systems based up in Boston. So what they're trying to do is they're trying to bring fusion technology or commercialize fusion technology, which is a very successful method of generating energy on the sun. Not so successful here. The joke is that, commercial fusion's about 30 years away from really working, and probably always will be. So, I can't say that we would add much, much value there, but it kind of goes back to a quote that's attributed to Steve Jobs, right? You don't hire smart people and tell them what to do. You hire smart people so they can tell you what to do. Well, you don't invest in companies and then micromanage a CEO who probably has, like we discussed, right? A really strong vision, a lot of passion, a plan. What they don't want is to have to do everything by plebiscite, right? Where, you need the buy-in of every single person every single time you want to do something. And so, we like to be available, and people know our backgrounds. Chiro has been very successful in real estate and marketing and sales, and people will reach out to him and say, hey, can I run this by you? I have a background in law. People say, hey, can I run this by you? We're happy to help out as needed. And there'll be times when, we'll say, hey, you might want to think about this, you might want to think about that. But we're not trying to run companies, and frankly, I don't think we'd be very good at it.
Yeah, you want to leave the experts up to what they do best, right? Focus on their business. Okay, so I know we have about 9 minutes left on today's webinar. I see a few questions roll in here. First question I have here is you mentioned that there were 3 to 4 months after the introduction. Is an introduction mandatory to a founder? I would assume. Question might be a little bit broken up there, but if I would say, after the introduction of, when you get introduced to a founder, I would say an introduction isn't always mandatory, but a warm introduction always helps and goes a long way, I would say, right?
Well, if you come to us from someone who we know and trust, it gets our attention.
Yes. Yeah, exactly. Okay. And then another question we have here is market sizing question. What dollar amount does a market have to be considered a small, medium, large, or huge market in the VC world?
I mean, it varies by the market, right?
Yeah,
and if you were to look at and how you define your market, and so if you were to say the blockchain, I mean, that's just or the metaverse or artificial intelligence, that's enormous. Yeah. But if you were to say, well, artificial intelligence applied to radiology scans, or artificial intelligence applied to radiology scans in the field of dermatology, well, that's a much, much smaller market than artificial intelligence generally. And so you really have to think about what the addressable market is for what you're doing. Ideally, how you can expand your addressable market. So in the example of, a company that's using artificial intelligence to help to review radiology reports in the field of dermatology, well, there are plenty of fields that use radiology reports. How hard or easy is it to expand the business into those additional areas? The surprising answer is that sometimes it's prohibitively difficult. And, people who think that, I can just do this anywhere are probably misinformed. So we look at the size of the market relevant to the problem that you're trying to solve.
Absolutely. The age-old question of what type of check sizes are you dishing out to your portfolio companies?
Yeah, so Beni VC is not a lead investor. We're not the biggest investor in any round. And so, our initial check size for, an early stage company is going to be in the, say the $150,000 to $300,000 range. And then follow-ons, there's no particular parameters because it depends on the size of the round. Right. Some companies will raise a follow-on round of, $1 million. Others will raise a follow-on or a Series A or a Series B round, and they'll raise $100 million. So, you have to be mindful of where you fit in the overall cap table for the companies that you invest in. And one thing we like about early stage investing is that you can be more significant on a cap table, at least at first. And, if you want to talk about returns and IRR, and we've said this, Chiro and I have said this to each other, we'll make an initial investment, and then we'll make a subsequent investment. And it turns out that, frankly, most of the return comes from our initial investment. And, you make money on the subsequent investment, obviously, but nowhere near the scale of your initial investment. And I think there is a little bit of personal satisfaction to being, one of those guys who was kind of right early. Yeah. And the joke in VC was by the time they went public, right? Like everyone was in Facebook, everyone was in Coinbase. But if you want to raise your next fund, it doesn't matter that you were in Coinbase or in Facebook or in Splunk or Snowflake or whatever. What matters is that you were there first. And so the thing about early stage investing, the motivation for early stage investing is you want to be there first.
Yeah, it's definitely the first good way to get in there first, for sure. Another final question, I believe. So are you interested in 5-year financial modeling when looking at a company to invest in? In other words, when do you think financial modeling is really needed for due diligence from a VC?
I mean, the short answer to that is no at an earlier stage. I mean, if you're talking about a later stage, which I always put as, Series C and beyond, I think a 5-year financial model would probably be welcome, if not required. But for an early stage company, what we look at honestly is not necessarily the numbers on the page, but the thought process behind it.
Yeah.
And so if you're telling me that, you're creating a product or a service in a business that doesn't exist, the metaverse, for example, okay? If you're telling me that you're going to go from, $1 million of revenues to $100 million of revenues in a year, to me, that sounds a little bit unrealistic. And so what we're interested in knowing is, how is it that you understand your role in an evolving market as it evolves? And, in terms of the length of projections, I honestly think that if I went back and I looked at 5-year projections for Fortune 500 companies, the number of them that would be able to accurately predict their financial results 5 years in the future would be 0. And these are very sophisticated, very mature companies. So, what I would like to see is, maybe a projection for the next year or two. But I think what is more important, and that, that's where people say, oh, I need to show that this thing's going to scale rapidly and we're going to make hundreds of millions of dollars in revenues. I'd rather understand your thought process and the assumptions behind your calculations. And again, you take this in stages, right? You're not going to take a seed round of $1 million and go public. I mean, you could, but it's very, very unlikely. You're going to take a seed round of $1 million to get you to an A round of, $5 to $10 million, which you're going to use to get you to a B round of $20 to $50 million, and so forth and so on. And there are exceptions, and people focus a lot more on the exception than they do the rule. There are some people on this call who will tell me that, I think it was Vine that was acquired by Twitter for $30 million and something like a month of operating history. And these things do happen, but they don't happen that often, and they're not really a good way to bet. You certainly can't plan on it. So it's better to have a good plan to really grow something in a measured and understandable way than to, make claims that ultimately, if someone reminded you about in 3 or 4 years, you might feel a little bit reserved about.
Yeah, absolutely. All right, so I know we have about 2 minutes left. So just to close out here, what would be one message that you would give founders or entrepreneurs here to take with them from your experience and our conversation today?
Well, I mean, that's pretty broad. I mean, make sure you're doing this for the right reasons. Entrepreneurship is glamorous, but it's hard. And I think it's easy to focus on the glamour side of it and harder to focus on the hard side of it. So, I'd keep that in mind. And then in developing your business, think a lot about the problem that you want to solve and why you're doing it better than other people. And, that's a way to build a good business. And if you read a research report that said that, artificial intelligence is going to take over the planet in 30 years, pretty much meaningless. What's meaningful is, here's a way I can use artificial intelligence to solve a really key problem. I'll leave you with just, one particular company that we're invested in. They have, they're a diagnostic tool for identifying which lesions or abnormalities in the pancreas might be cancerous and might not be. So it's a cancer screening device. The interesting thing about this particular field is that the alternative method and the current standard of practice is an extremely invasive surgical procedure where the surgeon essentially opens you up and takes out all of your internal organs to get to the pancreas to be able to inspect it. So, they say that no surgery is minor surgery. this by any definition is major surgery. And so if you can come up with a solution that alleviates the need for that procedure, you're really using a technology to solve a critical problem. And so if you can think about it at that level of specificity, you've probably got something. And if you just say, you know, I want to make money in crypto, I mean, you might. I mean, frankly, plenty of people have, plenty of people have lost money, but it's not necessarily the process that we're looking for.
Yeah, it's a great answer. All right, well, just want to thank everyone today for joining our webinar. Again, apologies for the technical difficulties earlier. Charles, thank you. Thank you to our partners. If you want to reach out to Charles, he can be found on his LinkedIn under Charles, under McCormick and O'Brien law firm, or under Beni VC. Thank you, everyone, again, and we look forward to seeing you next time.
And just a quick shout out to Nanea Reeves, who's building Trip. If you're on the metaverse at all and you haven't found Trip, please take a look. Really cool, really innovative. I think I mentioned, Jason, we're really interested in the mental health space.
Right.
I think this is, more broader, the mindfulness space. But Nanea is doing really interesting stuff, and she was kind enough to take some time out of her day to join us today. So I did want to give her a shout out. Full disclosure, Beni VC does have an investment in Trip.
I did see that company, and it does look pretty cool. I'll definitely have to give it a whirl for sure. All right, well, thank you again, everyone, and enjoy the rest of your day, the rest of your week, and look forward to seeing you next time for Meet the VC.
Thank you, Jason. Thanks everyone for
Take
being
care,
here.
everybody.